The RSI, Relative Strength Index, is one of the most popular indicators, but if you're simply using it to spot overbought conditions to get short and oversold conditions to buy, you're doing it all wrong. In this video, we share the top 3 ways the pros use RSI, and they're likely not what you think. I'm Mike Bellafiore, and we're one of the top proprietary trading firms located in New York City and proud to develop number 7 and even 8-figure per year traders. Watch, take notes, and learn so you can use this powerful indicator like the pros do.
RSI is one of the top indicators discussed on the desk, probably one of the top 5. Traders use it. It's on every platform. There are a lot of books just about that. It's been commonly used for years.
But it's so commonly misunderstood. So today, Jeff and I want to talk about what this thing actually measures and how we can use it to make good trades. The RSI indicator measures strength. After all, it's called the Relative Strength Index. And this indicator is a momentum oscillator. It measures the speed and change of price over a set number of bars, and it oscillates between 0 and 100. Many people use it to spot overbought or oversold conditions, and I think this is probably the most common use of the RSI. And this is where most traders go wrong right off the bat. And we'll talk about this because it can be used in this way, but we have to be careful to use it correctly. And we'll outline a couple intraday overextension setups using the RSI in this way. And there are also other less common, but just as powerful ways to use the indicator. And we'll cover those too, including my favorite way to use the RSI, which is probably not what you think.
RSI can be used for any type of trading, right? You could use it for intraday scalps. You could use it for swing trading. You could use it for trend trading, intraday trend trading, and both higher time frame daily trend trading if you wanted to.
Yeah, absolutely.
Okay.
All time frames. So let's quickly review how the RSI measures momentum. Okay, so we've got a chart. It's a daily chart of the SPY right here with the RSI on the bottom that you can see. This is the indicator with default settings. And look, the RSI calculates the average gain and average loss over a given number of bars. And it then computes the ratio of these gains to losses and normalizes this ratio on a scale between 0 and 100. And you can see that scale and the oscillation on the chart. The default period is 14 bars, and most traders use 70 and 30 on either end to mark overbought or oversold conditions. And you can see that right on the chart as well. Most traders use this indicator for mean reversion strategies, those overbought, oversold signals. And this leads us to our first example. In using the RSI in this way, this is where traders go wrong. And the thing to really key in on is just because the RSI is overbought or oversold does not mean that the market needs to reverse.
But you'll hear this a lot. People will say that exact same phrase. Just because it's overbought or oversold doesn't mean it can't get more overbought or more oversold. That's very nice statement to say, but that gives us no value whatsoever. So help us understand a little bit more about what you're talking about specifically.
Yeah, so we can gain value from those signals, but they're not going to work by themselves. Okay, this right here is an hourly chart of the Qs, and you can immediately see that stocks can remain overbought or oversold for a long period of time, and we can't blindly fade these signals. So there's 5 signals on this chart. It worked 1 out of 5 times, so that it did catch that low there. But I'm not trying to trade something where I have to lose 4 times to get a winner. Obviously you get completely run over in the recent move that the market made. And this is a current chart. So, we've been going higher for a few weeks, and you do not want to be shorting those overbought signals whatsoever.
What adjustments can we make then to make it a little easier for us?
Yeah, so there are a few technical things we can do. So we like to use 80 and 20 instead of 70 and 30. Simple thing. It just makes it a little bit more special when you get those signals. You're going to get less of them, and they're going to be more meaningful. So here's an hourly chart on the Qs. Same chart. changing it to 80-20, and you can see we got 2 overbought signals and no other signals. And of course, those overbought signals, again, didn't work. Like, you wouldn't want to be shorting those. But we did remove a lot of the signals, including, of course, the only one that worked. But that's okay, because I want to be very selective here, right? We're still going to get run over a few times, so this doesn't complete the picture, but we're getting closer to making this indicator more meaningful. And by the way, there are 2 really great RSI setups on this chart right now that we will go over at the end of the video, but that's in another section. So how do we avoid these false signals? And, this is really the key.
Yeah, how does RSI actually become a tool that's functional versus just a guide that tells us something?
Yeah, so what I like to do, and again, we're talking about mean reversion right now. We're talking about overbought, oversold signals. It's got to be overdone on multiple time frames. Like, to me, like, that's like the golden ticket to using this indicator, because if it's just one time frame, like, it can easily do what we're seeing right here. The odds really start to stack in our favor if we're checking multiple time frames and if we get this signal on the higher time frame. So if you're trading on a 15-minute chart and you check the hourly, if you're getting the same signal, that's going to really stack the odds in your favor.
So if I'm trading on a 1 minute, maybe I'll look at the 5 minute as well. If I'm trading on a 5 minute, maybe I'll look at the 15 minute as confirmation. If I'm on a 15 minute, maybe I'll look at an hourly. If I'm in an hourly, maybe I'll look at a daily. If I'm on a daily, maybe I'll look at a weekly. Are those kind of what you're talking about?
Yeah, 100%. So we were just on the hourly chart, and let's flip to a daily chart. And this is the same chart, and now we see no overbought signals, right? So if we're trading that hourly and we get those overbought signals that we're getting run over, we got to check the daily, right? And the daily is not even close here. So that just negates everything, okay? If we're just going to be really systematic about this. So we don't want to take the signals on the hourly chart. So we've removed false signals. And look, any indicator is going to give false signals sometimes. We just want to create a process where the odds are in our favor if we're using this. And obviously we're combining it with other things, but it's a tool. And again, it's a tool to help us visualize. It's a tool to give us rules. And it's a tool, if we actually want to build an algorithm, we can use to define these things.
And there's a big thing on our desk of, if you put something on your chart, you have to understand what it is. You have to understand how it's calculated, if it's an indicator. And then most importantly, you have to understand the ways in which it can be a benefit to your trading. So even looking at one higher time frame to get a perspective can benefit your trading immediately.
Yeah, absolutely. So now that we've created a process to raise the quality of these signals, how can we use this to spot some great trades? So let's dive into some examples, and let's look at an intraday trade. This is CDIO not too long ago, overbought on multiple time frames. That's what this setup is, right? So we're going to give you an example of how this looks. Okay, so we're trading a runner. It makes a parabolic move off the open. We can see that in the chart. This looks like a short opportunity for a playback to VWAP, right? That's a real play the traders on our desk make. So just looking at the candles, I mean, this is getting parabolic. So we're going to want to consider this, right? If this is in our playbook, right? So how can we start to quantify this using the RSI? So we want to look at the next higher time frame, right? So Jeff was just talking about, if you're trading off of the 1 minute, go to the 5 minute. So we do that here, and we're not getting that signal on the 5 minute. So if we're going to be systematic about it, wait, it's not confirming yet. We don't look for a short yet, okay? So we keep watching the 1 minute. It pulls back, holds. Actually a great momentum long setup there, and it starts to get overbought again.
We'll cover that. We'll cover the momentum long a little bit later, but this is exactly what you were talking about. I saw the potential of the short on the 1 minute, but then when you check the 5 minute, it's not there. It doesn't give you that confirmation. Yeah. And so you just wait. Okay.
Yep. So now we're getting it again on the 1 minute. So go back to the 5 minute, check the 5 minute. Now we're getting the signal on the 5 minute. Right, so now the odds are, nothing works 100% in trading, but now the odds are much more in our favor than they were before, and that's what it's all about. So we checked the higher time frame, and now it's confirming. So let's just go one step further and check the 15-minute chart. Just might as well. Okay, and lo and behold, we have a signal there too. So this is actually looking pretty good.
But what do we do to trade this.
All right.
Right. So we would have to go back and that's great. But do we just short it because it's there, or is there another indicator or some price action we could layer on?
Yeah. So if you've watched any of Lance's videos, he talks all the time about the right side of the V. That's the term he uses, the right side of the V. And in any kind of overextension play, like this is exactly the approach we want to take. And like if you haven't seen these videos, like go back and watch Lance's videos. They're really great. We want to wait for the turn. Like that's the whole point. So just because it's overbought, again, even on multiple time frames, we need a signal. We need some way of identifying that this thing's turning, right? And we're going to do things like watch the tape and watch the chart for this. So how can we quantify this for these specific setups? And
this is one of my favorite, and this is actually a double bar break. When you're doing a 1 minute chart, you can look more for a double bar break than a single bar break. But you can take for most charts, you'll be looking for a close below the prior bar low. So, when you're trading the 1 minute, you a lot of times will be looking for a double bar break. And that tends to confirm the right side of the V a little bit more. So if you have that combination of overbought above 80 on the RSI, in this case, on multiple time frames, one lower and one higher time frame, then you get the double bar break. Or if you're trading on a higher time frame only, say you're trading on the 5 minute, a single candle takes out the low of the prior candle. Now, you don't wait for the close, right? If it just takes out the low,
yeah, no, I'm watching the tape right there, and I just want to hit it.
That's exactly right. That's something that a lot of people are like, do you wait for the close? No, we wait for it to just clear the low of that because we already have the setup. Now we're executing the trade.
Yep. And to couple with that price action that Jeff is describing, right, waiting for that break of the prior bar low, right? Because it's single time framing all the way up. That break has not happened yet. So that actually makes the setup better because that really means that something has changed. But we can also couple this with a signal in the RSI. So if we do this and also look for the RSI to return back to normal, right? So you see that overbought, it on the next bar close, it returns back inside and it's not overbought anymore. We don't have to wait for that. But that could be some confirmation. Like you can add on that, right? Or if you're not getting that and price is holding, like that might be a reason to get out. Because usually when that happens, that's like how I know I'm right. So with a stop above the candle high or above the whole move high if you really want to be more conservative about it. So we target VWAP on a play like this. And we also, in terms of the RSI, we can target the RSI midline. So here's the chart kind of extended out into the day, and you can see what happened. We short that break. It comes in, and we're kind of looking at VWAP because, it could go lower, but I like to target VWAP because so many of these you just don't know once it starts reverting to the mean like that. Like that is the mean for the day. That's a good move. So, we get the midline touch on that first blue circle where you can take some profits because that's the RSI reverting to the mean. And then when it hits VWAP, you can take some more because that's price reverting to the mean. Does that make sense, Jeff?
It does.
Okay. So let's
you just stole my rubber band trade, but that's okay.
Yeah. let's look at another one real quick, a downside extension play, just to show that it can work in the other direction. So this is EJH. This happened
and
actually.
This is going to be something that I want to make sure we're making a very clear point here is if you have RSI in your chart, you are not predicting that this is going to occur on multiple time frames. We're not sitting there and going, oh, I really hope it gets to oversold. What we're doing is we're observing the price action. And as it gets to that oversold level, that 20 level in this case, and it gets below that 20 level, then we're focusing in. We're honing in and we're looking to check that higher time frame as well, or we can look to check that higher time frame as well. If we have both those confirmed, then we're kind of thinking about our execution and what levels could we execute this trade on. So it is a really interesting thing to do, but wanted to make sure we're clearly talking about the process because really what RSI is giving us is a setup. It's giving us a trading setup, and we can make a bunch of different trades. And traders on the desk will make different trades off of this exact same setup. But we really do want to make sure that we're talking about it the right way. We're not looking at this in isolation and saying, RSI, boom, press the keys. We're methodically letting the trade set up for us, and then we're letting the setup occur, and then we're taking the trade according to our trading playbook.
That's such an important point. That's so key. And as Brian Shannon would say, like, it's an area of interest. He says that all the time. It's an area of interest, right? It's getting our attention. It doesn't mean we're going to get short or long. It just means, okay, you know what? Like, this thing is starting to set up. Let's zoom in. Let's see what the tape looks. Let's get our trigger ready. So perfect. So we have EJH, overextension to the downside. It's like the mirror image of the last trade. And I think this was a liquidation or something, which is just quite insane. But yeah, we're getting the oversold signal on the RSI 1 minute. So we're going to check the 5, and we're getting it there as well. So we've got this thing setting up. And so what do? We look for the break of that candle, right? And when something's like this extended, I mean, this was also halting. So, you wouldn't really be trading this unless you probably trade halts, but it can be used on plays like this. So we break that prior candle, and that would get me in with a stop against the low in this case, because that's the previous candle and the low. And again, we're going to target VWAP and the zero line on the RSI, and they actually happen like on the same bar there.
So this is the most common way traders on our desk will use RSI. Anybody that has RSI on their charts that understands it, this is the most common way that people use it with the overbought, oversold. Typically it's 80 and 20, not 70 and 30, which is the standard. What are some other ways? Because when I walk by your trading desk and we talk about ideas, you're not talking about it typically in overbought, oversold terms. How do you use RSI?
So this is my favorite way to use it. So this indicator was originally developed not to measure overextended conditions, but to measure relative strength, right? It's the relative strength index. So it's really measuring strength. So what I like to do is use the RSI to screen for relative strength. So I set up a market view that includes RSI in a column in the market view, and I sort by RSI.
So in market view is that's a filtering tool that we have on the desk.
Yeah.
So it would be the same as building a scan in any sort of trading platform.
Yeah, absolutely. Okay. So this is a Thinkorswim market view right here.
Okay.
Anyone can do that. I'm sure other platforms have these. We have it on the desk. But you can see, super simple. I'm taking the NASDAQ 100, and I have an RSI column in the middle there, and then I just click on that to sort by RSI so that the highest RSI readings are at the top. So this is going to sort by relative strength. So we're sorting the NASDAQ 100 by relative strength. And what I'll do is I'll just hook this up to my chart, and I'll just blow through charts. And for me, this is a way to just quickly see, especially when we've had a move like this in the market. Like, I want to see the stocks that actually acted the best on this rally, because a lot of the times when the market starts to pull back, like, these are the ones to buy, right? Especially if they're holding up really well. And so, there's a pullback trade that kind of comes from this, but this is how I prepare for it. I'll get my group of relative strength stocks. And so I'll just use this to blow through charts. And so we can kind of actually do this as an example, because I put some charts in here. I just put the top 8, and we can just blow through them really quickly. And what I'm going to do is, like, I'm going to combine this with like other trading strategies to get long or short on the pullbacks. But this is just my way to get the list. Okay.
When you're using this list to identify the setups that you might want to trade.
Yeah. Okay. Yeah. If you're looking for strong stocks, this is just a great way to do it. And as we blow through these charts, you'll see that they all have similar moves over the last like 10, 20 days. And they're all pretty much straight up, super strong. And it's kind of funny because as we blow through, you'll notice that, like, I think 5 out of like 8 were semiconductors. So like that's kind of interesting to me too, because that's kind of telling me something about the market and stuff like that. So it's just a nice tool to, at the end of the day, just go through, find strong stocks. You can do this with the weak ones too. You just flip it and look at the worst RSI readings.
So we've covered two really good uses of RSI and RSI specific to what we're doing here. But there's one other, and I actually didn't know about this, so I'm excited for you to share it with us, because when we were prepping for this kind of this video that we're putting together and the uses of RSI, this one snuck up on me. And when you said it, it just like it made sense to me, but I've never looked to do this before. So what's this hidden secret of yours that we can all learn from?
I don't know how hidden it is, but yeah, so you can use the RSI to buy pullbacks. And when I started looking at the RSI, I started to notice on really strong stocks with really strong trends, the RSI would just live between 50 and 80, right? It would get overbought and then it would pull back and it would go to 50, right, the midline, and then it would come back and it would just bounce around in that upper quadrant. And so, and it would work on the downside too. And so you could kind of gauge the RSI for those places where the pullback might be ready to buy. Okay, like these, they don't go all the way back to 20. They'll usually stay in that upper half. Okay, and so just based on that theory, and again, this is similar to that overbought, oversold thing, where this is just sort of a tool to give us a heads up. Like
but there's a specific use that I'm observing here, and it's only when something is trending that you can use that midpoint touch.
Yes, that's one of the key criteria in this setup is that you want to be with trend.
Yep.
You want to be with trend.
You're not going to use it when it's chopping around. That's not going to mean
not
anything.
At all.
But when it's trending, you can look for that reversion back to that midline.
Yes.
As a potential confirmation of the trade.
Yeah.
Okay, great.
Yeah, absolutely. And so remember that hourly chart of the cues that we mentioned earlier? There were two setups on the chart. So here's that chart again. And I'm just kind of pointing out both of these setups. And what we're looking for here, it's kind of a 5-step process. Okay, so one, overbought or oversold, okay, or close to it, right? So you can see like before that red circle, market came down and the RSI reached just about 20. Okay, so we want to see that before this because that's showing that the stock is very weak. And then we want to see that weak bounce. We want to see the RSI return to 50, return to that midline and hold.
So it looks like the variables for this specific setup are, first, we need something to get to that extreme that in, if we're talking about the short, we want to see it get oversold first. And again, we're talking about the retracement short, so that midline. So first step is we want to see it pretty much get to oversold. What's it going to do on the higher time frame?
So on the higher time frame, you just want to make sure that it's not oversold.
Okay, so we're eliminating, we're actually flipping the script on what we did before, where we said we are looking for it to get oversold on multiple time frames. In this case, we're actually looking for it to not be oversold on multiple time frames. If it's oversold on the shorter time frame, that's okay. But if it's oversold on both, we're eliminating this midline retracement trade.
Yep.
Okay.
Yeah, and then the cues turn into an uptrend, and we get a long setup. Okay, and this one is actually much more clear, much more powerful, in my opinion, because you get the overbought signal, and then you get the reversion back to the midline very cleanly. Okay, so and then when we get that, we can just wait for the break of the prior candle high, just like we were doing before, and we want to see the RSI in a long setup, for instance, get back above 50. Right, it's very, very similar to the setup that we outlined earlier. And then we can buy with a stop against the pullback low, trail a stop. So here's a 1-minute chart of the cues during the recent bull run. So this is a 1-day trade here. One of those days over the past few weeks when the cues have been really strong. The internals were really strong on this day. I mean, there were a lot of things kind of pointing to strength. So this is the kind of environment where you might be looking to trade this setup. So this doesn't always work. So you want to make sure you're with trend, like Jeff said. You want to combine it with price levels, combine it with market internals. And this can be done on the daily charts, can be done to scalps intraday, right? So as you can see on this chart, we kind of did it. We did it twice, right? So in the morning, it gets overbought very cleanly, comes back, holds the 50, reclaims, right? And then you can use an ATR trailing stop, like in this case, to just stay in the trade. And, it happened one more time. So like any indicator, always remind yourself of what it's measuring. And remember, it's just math. Like, it's not magic. This is literally just math. And it's just helping us quantify these things so that we can either see them clearer, get a heads up, like an alert, put them into a model. Very, very simple.
And one of the ways I've seen you use this is when you're looking at like 0 DTE options. You're looking for this exact setup, this third setup, as a potential for a trigger for 0 DTE options. And I know we did a video on 0 DTE options and kind of some of the other factors that you look for in order to make a trade, a directional trade using 0 DTE options. So, maybe if you have more questions about this, we also covered the trailing ATR in that video, so you can go check that out as well.
Yeah, we can put that in the link in the description.
Awesome.
All right, thanks.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of S&B Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part, you don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.